Hi, I'm Roger Montgomery from Montgomery Investment Management, and welcome to this third part in our series on investing in emerging markets with June Lui. June, thank you for joining us. June, China is an emerging leader, if not arguably a leader in a bunch of technologies, including electric vehicles, AI and renewable energy. Tell me a little bit about your approach to investing in these sectors with Polen.
Yeah, we believe that the technology advancements, in particular in AI and electric vehicle, they're all very exciting, and that will have impact on many companies in the decades down the road. And we believe that as an investor, not only we are excited by the technology itself, but also how those companies can generate profit for shareholders. So return profile is really something that we care a lot about when we evaluate the potential in those developments.
Yeah, look, my experience has been it's very easy to get excited about new technology transforming the world, but it's often the case that new technology that transforms the world helps consumers, not necessarily investors. So how do you refrain from getting excited? What are the metrics that you look at to decide whether or not a company is going to generate profitable growth from that new technology?
Yeah, we focus on companies that have already a service or products that are already have a fee-based charging model, which means that the AI is not just something nice to talk about, but really can help them to make the product even more attractive and to make it into a service that they can charge for revenue. So there are companies that we own, for example, they operate a office software in China, which is the Chinese version of Microsoft.
Right.
So apart from they benefit from the trend of localization, which means Chinese companies are migrating away from Microsoft to the Chinese version of office software, but also they are incorporating this AI function as in the co-pilot function. So these AI developments are helping the company to provide more premium services, more efficiency improvement tools for their customers, which would lead to an increasing income and revenue from customer subscription.
So I know you've heard this today. You've done a lot of institutional meetings today. I'm sure everyone wants to know about DeepSeek. Everyone wants to know whether or not it's real. Is it something that you think can be scaled, or is it something that you think the Googles and the OpenAIs of the world and the Microsofts of the world will copy and replicate and compete with? What's your view?
Yeah, DeepSeek brings a lot of excitement, and everybody loves that kind of story. A small nobody team is able to fight the giants and win with flying colors.
Yeah, we love a David and Goliath story.
Exactly.
We love seeing David win.
Yeah, so we see that actually DeepSeek is not the only one in China. There are a few other large language models built by not only the bigger platforms like Alibaba, Tencent, Baidu, but also some other smaller platforms, smaller companies come up with very credible large language models, which are able to do in a very creative way. So they are real. And we believe that this is a result of because they have to operate on very limited resources, and they are forced to be efficient and forced to be innovative. And that's what we see in the landscape of the China market. That will happen in many aspects, and yes, we'll continue to see more Chinese companies coming up with good and innovative solution where the world will be happy to see that innovation, not just because of it is from China, but also benefits the whole ecosystem and whole world in terms of the technology advancement.
Fantastic. And tell me something, again, a question. I have a habit of asking questions without notice, forgive me. Have you formed a view on how large language models will evolve? You know, do you think you and I will be using small language models instead of large language models? Have you thought a little bit about that, and what's your insight?
Yeah, we believe that large language model, at least from our understanding from the key players in China, it will be commoditized fairly quickly. That's why when we look for investment opportunity, we have already looked beyond that. So most of the investors in the past has been focusing, first of all, hardware. It's NVIDIA, and NVIDIA. And then moving on to the large language model. But we think that those are also like something in the past. So when we are already seeing many models going free for users, like in China, and the training and all the inferencing costs has been much lower in China than the other parts of the world anyway. So we are looking beyond those large language model, but for those that can go into specific inferencing and smaller models, which can fit into more application and charging model as well.
And so then thinking about the upstream suppliers, if inferencing ultimately requires less compute power because of the more efficient way of doing inferencing or inferring, then does that mean you think that ultimately the expectations or the current forecasts for power use, for chip use, do you think we might get to a position of oversupply, or do you think ultimately the demand is so great that it'll soak that up as well?
We believe with the more efficient models available, that will also increase the demand side. So at the moment, because only like a few handful of like hyperscaler is having that enough of power to do that, that actually putting a lot of potential use scenario away out of reach. So with the improvement in the efficiency and lower cost, there will be more demand. In the sense that there will be more application that can be developed out of that. And so whether there will be a shortage or oversupply, it really depends on, because at the moment it is still shortage, right? So for any powerful chip, but in the future there will be more demand, and so at the same time you don't need the most powerful ones. So it's too early to tell where we will see the balancing point at the moment.
But the equilibrium point.
Equilibrium point.
Yeah,
Thank you.
Well done.
So, but at least we see that there will be more demand in terms of the expansion into the application.
So it sounds like you agree with the idea that consumers will ultimately benefit, but you're moving further downstream to find those companies that are profitably applying the technology.
Exactly. So we need to see eventually that those companies can leverage on those technology to generate good returns for shareholders.
Wonderful. Thank you so much for your time, and thank you for travelling to Sydney to be with us today. That's all we have time for. Hope you've enjoyed the series with June. And for more information about investing with our partner Polen Capital, please visit our website.